Hello, I'm Angeline Ong and welcome to Beat the Street, the show that gives you all the tradable news ahead of the Wall Street Open. Coming up, US stocks cautions seen with Netflix, General Electric, P&G and Johnson & Johnson earnings on deck. Oil jumps, crude futures rise 2% on supply disruptions in Russia and the US. However, we're seeing signs of this rise ease now. And Bitcoin crypto stocks falling as Bitcoin slips below the $40,000 mark. Now, good afternoon. A warm welcome to this new edition of Beat the Street. I'm Angeline Ong. Not long now before Wall Street starts trading. And let's have a look at the volatility index first, because it is still remarkably low after, if you can see here, various attempts to break past that 15.4 level. Quite a lot of momentum going on there. If you look at the MACD as well, it shows you that there's a lot of volatility. Currently still, it is around the 14.2 mark and that trend channel. Let me widen that out for you. Still in a slight downward trend. But as you can see here, it has tried breaking out of that 15.8 mark, 16 mark, around there. And if we see it break through, then perhaps we could see it go towards the other highs at about 21 seen last October. However, it's quite far from that at the moment. Let's have a look at Wall Street for you as well ahead of the open, because it is looking like quite a subdued start. Not a surprise really, given we have Microsoft, Apple, Intel, some of the biggest names in tech about to report in the coming sessions. Investors also looking out for the PCE and also the S&P Global PMI readings and advanced Q4 GDP print for possible clues on the Fed's thinking ahead of the next policy decision. Now, of the S&P companies that reported results until Friday, 84.6% have surpassed earnings expectations compared with the 93% beat seen in the week prior to that. This is according to LSEG data. Speaking of the S&P, we've seen fresh intraday record peaks, and it closed at an all-time high for a second session on Monday. Chris Beecham has been tracking the action for us.
The S&P 500 sits just below yesterday's record high as we await earnings from Netflix. And of course, it gets busier from here. After a bit of a hiatus over the past week in earnings season, the news flow returns with a vengeance from tonight. Netflix and Tesla. Next week, you get the rest of Magnificent Seven, and that will, of course, affect the S&P in a big way. The substantial weighting of tech stocks in the S&P means it probably affect the index more than the Dow, depending on how those earnings go. So while we are still sitting at record highs, and that's a strong indication of further strength to come over the medium term, it's certainly the case that with earnings season and then Fed meeting at the end of the month, we could see some volatility creeping back into US indices.
Now, as Chris mentioned, Netflix, one of the big ones, scheduled to report earnings. This is after the close. The street rather expecting earnings of $2.20 a share on revenues of $8.7 billion. Netflix's performance in Q3 was remarkable. The company achieved an impressive 8% growth in revenues with a net addition of 8.7 million paid memberships. For Q4, however, Netflix had previously said it was looking at the continuation of robust user growth momentum, and the net addition of paid memberships is projected to be close to the previous quarter, potentially with another 8 to 9 million new subscribers. And in November, Netflix, this is 2022, Netflix introduced a cheaper ad tier subscription. And more recently, if you remember, it also cracked down on password sharing. All those people out there that share their Netflix passwords with their mums, dads, relatives, well, that couldn't happen anymore. And that also helped to bump up subscriber numbers. The company's share price has gained some 41% in the last year and is currently higher heading into the US Open. Let's just have a closer look, because Netflix is all sessions, and just checking on the stock there, it is currently up 1.5% on the IG platform. Now, Texas Instruments, another company that is due to report, but I just checked for you, it's not out yet. Procter & Gamble is another one that we have been looking out for. Let me just check on that, because it was not out when I last checked. However, it might have slipped out as we open the show. Procter & Gamble, of course, one of the key ones that give us a good idea of what the consumers are doing, especially in times where there's a cost of living crisis. Procter & Gamble currently, I can tell you, not out with earnings just yet, but we'll keep a close eye on that for you. The other one that we're looking out for, Johnson & Johnson, well, that one is out. Johnson & Johnson's fourth quarter profit beating the street. Strong demand for its psoriasis drug Stelara helped, and also it sees higher revenue from its multiple myeloma drug and newer oncology drugs as well. Let's have a look at Johnson & Johnson's shares, if we may. Now, Johnson & Johnson is all sessions on the IG platform. Just looking at that here, and it is currently suggesting a flat open, really. Johnson & Johnson shares, let's just show you back to where they were the end of September last year, current at around 162 before falling in October and then gaining ground once more, as you can see here. However, it's had quite a resistance at around the 16,271 to 16,300 level, trying to push through that level. And if it does, then perhaps it could head towards the 17,000 level. But at the moment, it seems somewhat stuck in this trend channel. Year to date, it shares up around 4.5%. Also, some other earnings have trickled out whilst we've been on the show. Just showing you a quick snapshot of the headlines. GE posting higher profit on strong demand for engine parts and services. 3M, solid Q4, they're exceeding earnings and cash flow expectations. And Halliburton, well, its Q4 pre-tax profit coming in at $835,000 million. That is slightly below. That is below the IBES estimate of $917.5 million. Just wanting to check in on some of the chip stocks for you, like NVIDIA, because NVIDIA is all sessions, but it's not just that. We are also watching this space because an index of semiconductors did hit a fresh all-time high. This is the DOT-SOX. While NVIDIA also gained ground to a fresh record, just trying to widen that out to show you that chart and that amazing upward trend channel that I've drawn for you that seems to be in place since the 23rd of May or thereabouts. What's also interesting about the space is we are looking at US gaming related stocks for you as well. Just bring up Take-Two, for example, interactive software, and also the likes of Activision. We'll be checking in on that for you throughout the day too, to see whether there's any move, because we did have news overnight that Tencent moved after China's gaming regulator took down draft rules to control spending on video games from its website, according to checks by Reuters. Now, before we go, a quick last look at the indices for you and how the market's looking ahead of the open, because S&P is still very near highs. Let's look at Wall Street. Also checking out S&P 500, which Chris Beecham had a closer look at earlier. And as you can see, they're still in the upward trend channel, confounding many analysts that had expected a sort of slow, gradual meltdown for now. And that's it for this edition of Beat the Street, the show that follows all the trading action, helping you position yourself ahead of the opening bell. For more trading insights, follow me on @IGCom and @Angeline Ong on Twitter. This is IGTV.